Welcome back to the Schwab Network. We got a little time until the bell here. Let's talk about the big picture with Cooper Howard and Liz Ann Sonders joining me this afternoon. Cooper's Director and Fixed Income Strategist. Liz Ann is the Chief Investment Strategist at the Schwab Center for Financial Research. Afternoon, team. Good to see you guys. Today, kind of quiet this week. They'll got off to a good start, Liz Ann. And tomorrow we got a big day. What do you think is most important here? Because we got the Fed, we got a big stock.
The big stock. You know, Oliver, we don't cover individual stocks, but I think that's the reason why it's quiet today, and probably will be before the report. A lot, obviously, riding on that. If you look at the tech sector broadly, the blended growth rate expectation for the first quarter, which includes companies that have yet to report, is about 23 or 24%. But UX Nvidia out, and that drops down to 11%. So clearly, the expectation bar is certainly set high, and the whisper numbers have been coming in fairly hot. So we'll have to see.
Is there a lot of precedent for moments like this where it's so blocky, the kind of construction of earnings for the index, Liz Ann, dependent on one company?
It is rare to see. I mean, we've had concentrated markets in terms of, the top 5 or 10 stocks dominating performance, but the sheer size of the earnings contribution is unique relative to history.
Should be fun. Tomorrow we get the FOMC, Cooper. I mean, I think for most stock-focused people, that's going to be pretty far second on the list. But I can't help but notice, yields have been kind of sticking around where they were back when CPI came out. So, we are kind of having a little bit of a two-way trade in bonds.
Yeah, so the stock folks get the big stock tomorrow. The bond folks get the big minutes tomorrow. But I don't actually think that they're going to be big minutes tomorrow. I wouldn't be too surprised if we kind of hear a reiteration of what we've already heard from many Fed members and Chair Powell himself, that they are preaching patience. So they are going to be hesitant to cut interest rates before being too early on that. So they don't want to see inflation reignite. So I don't think, yes, we do get the minutes, but I'm not expecting much of a shock from what will come out from them.
How much of that is just because we've heard speakers all week basically already? Like the volume of speech is already, we've got a big sample size in the recent, couple of days.
Yeah, and I think that they have really done a pretty good job of kind of laying the breadcrumbs out about what they are looking for and what they're anticipating. So again, they have been preaching patience. So I do think that part of that has been just the sheer magnitude of the number of speakers that we've heard. So we've heard from Chair Waller today, we heard from Waller today, and he projected that they are potentially going to cut interest rates if the data coincides with that. So they just want to see more good inflation news. And I don't think that that's too big of a surprise or anything really new to come out.
Okay. Yeah, it seems like the general script has been fairly well followed. I hear a lot of the word steady, higher for longer. Is it my imagination, Liz Ann, or has the market gotten quite a bit more comfortable with the notion of higher for longer than it was maybe 5-6 months ago? It feels like as long as we're not hiking now, these last couple of weeks, we're like rejoicing.
Yeah, I think it was a bit of a reprieve down from 4.7 in yields in the case of the 10-year that helped the market. And at least for now anyway, the possibility that the Fed would have to pivot back to rate hikes coming off the table, given a more tame set of inflation readings recently, as well as the weaker than expected jobs report. So I think the market can remain in a healthy situation if we're in this higher for longer. And we have to remember, too, that the math is a little tricky the next few months in terms of getting whatever inflation metric, particularly core PCE, back down to the Fed's target, because you start to take out the really easy comparisons from a year ago, which, of course, a year ago, your year-over-year comps were to the year prior when you had, in the case of CPI, a 9 handle. So we do have to be mindful of a math problem here in the next several months as it relates to base effects.
Okay, so hope that we're going to see massive progress. Might be kind of a long shot because we're still looking for that word progress, where it seems that even though the market really liked the last couple pieces of data, it's very arguable that they weren't very progression in the right direction. Cooper, how much in the minutes do you think we might get more detail on how they define that? Because Powell seems to keep relying on that we need to see further progress. I think there needs to, I mean, look, I would love to get some clarity on whether less inflation is progress, but it seems like the market's determined it is.
Yeah, I'd be surprised if they really lay out exactly what they're looking for in terms of the exact number that they want to get it to, but they are seeing more progress on it. I think that what you kind of heard from a lot of the Fed speakers recently is that the most recent inflation data, although it wasn't really good, it wasn't awful. So that was progress towards that. So I think that that's another thing to look forward to. And so long as we get a couple more months of that, then yes, we do expect that rate cuts are going to be coming down the pipeline. So our view here at Schwab is we've penciled in between 1 and 2 rate cuts, likely to start later on in the year, Oliver. But that really assumes that we continue to see progress on inflation, at least not a resurgence of kind of the poor numbers that we've seen to start the year, I should say.
Our bar, always shifts. It seems like our goalposts on how we define the progress or how, at least what the market's happy with. I guess when there's a kind of worst case scenario laid out there and that doesn't quite happen, then things improve. But Lizanne, the combo of the inflation to the data the last 3 weeks was really what was kind of more troubling, with some of the survey data really falling off. We don't get much, but we do get jobless claims tomorrow. We got new home sales, composite, and then durables on Friday. Does any of that add up to anything important, Lizanne?
I think claims are definitely worth watching on a weekly basis. The initial print, but also the 4-week average, and in particular, what's happening with continuing claims. We did see that tick back up again in claims, and starting to see whether that turns into a trend, I think, is important to get a weekly sense of the labor market picture.
Okay, because we got a couple weak ones there, but the moving average is still, you wouldn't look at it and say this is a bad job situation, but it has worsened a bit.
No, but directionally, you've got to remember that better or worse often matters more than good or bad. So it's the direction that matters at this stage.
All right, for sure. Thank you very much, guys. Good stuff.